Good afternoon, it's Adil Fazal here, market analyst at CFDs.com. Be sure to visit the website www.cfds.com for your trading needs. Alternatively, you can opt for the educational site as well, where I upload my charts and analysis at www.cfds.education. Okay, this is a analysis of European indices being brought to you via CFDs.com. The European indices quite stellar performance today. The CAC is up 2.2%. Again, German DAX, another whopping 3%, very impressive. The Euro stocks again up 3%. So basically, it's a story of a weaker euro. And in order for us to start, we need to look at the Euro USD and the German BUNDS as well to a large extent, given the inverse relationship. So if I just bring up a chart of the Euro USD itself, you can see that the Euro USD in the daily chart has rejected the 200 MA post the Fed rate hike. Obviously, that's led to the euro collapsing down to the 1.0830 pivot low. We have bounced back since then. Now we are back into the 1.0850 region, and we are finding support at this juncture. Now, that's obviously a strength in the euro generally is perceived as weakness for European equities and vice versa. Now, the euro is obviously into support on the daily chart, and you can see this in more perspective on the 60-minute chart. You can see this bottoming tail here at 1.0830. Looking to build a base, even on a 10-minute chart, you can see that we are building a double bottom support, and that generally means double bottom on the euro generally indicates double top on the European equities. Okay, given the fact that they have the inverse relationship and the whole QE trade obviously goes into reverse, i.e., obviously you sell euros, long equities, and obviously it's the other way around. When you short or start to sell equities, euro generally tends to move in the opposite direction. So that's exactly what we're witnessing right now. Now, if I bring up the chart of the euro bond as well, bear with me. Well, let's bring up a chart here for you. You can see that the daily chart itself, yes, we have had a bounce post Fed, and obviously that's led to the euro obviously falling. And now we are expecting the actual bond itself now is actually at resistance. And you do seem to have this potential of a H&S formation. So again, that certainly needs to be considered as well. The 10-minute chart of the bund itself certainly has put a potential short-term top. You can see that previous, you can see it's better on the 4-hour chart actually. You can see that previous support equals resistance, and that's exactly where we're obviously certainly finding resistance at present. 60-minute chart certainly clarifies that as well. Okay, so certainly an area to watch. So we are expecting weakness at this juncture, which generally means a higher euro. Okay, given the inverse relationship, and that obviously is negative for equities. Okay, so that's the only way, or best way of interpreting it. Right, now in terms of economic data today, we have had a mixed picture. We've had stronger Eurozone construction output, and labour costs certainly falling as well. So that obviously generally tends to help. But again, it's that deflation story. If labour costs are falling, then obviously that certainly isn't a good picture in terms of wage price inflation, etc. So the PBOC advisor did say that they can cut rates, so that's certainly helping European equities to a large extent as well. But the main drag really is, or bearish factor in terms of the European equities, is weaker German IFO data this morning. That certainly has triggered a potential of a risk-off scenario or risk-off trade, and that should certainly put a resistance, or certainly indicate weakness from my perspective for European equities. It certainly doesn't justify the rally in the German DAX to a large extent. So if I bring up the chart of the German DAX, you can see that we are testing that 50% retracement. Now if I just bring up a 10-minute chart, and you can see the effect here. I mean, we've closed at 10,470, currently trading at 10,800. I mean, that's almost, and the pivot high of the day was 10,825. So we are up by almost 350 odd points, and that's not exactly a healthy sign. Generally on what's just on a weaker euro, on a weaker economic data out of Germany, that's not exactly bullish news. So again, certainly take that into consideration, folks. Okay, that's certainly important to take into consideration in assessing the risk in the marketplace. Okay, now the German DAX on the 60-minute chart, you can see that we are obviously being exhausted now. Although we are in no man's land, no real resistance can be found on the 60-minute chart. To be honest, the only thing that we could possibly do is take the pivot high from here, take it to the pivot low, and even then you can argue that you are at 75%, and that's about it. Okay, no real zone to take any potential short opportunity on German DAX. It is in no man's land, and all we can do at this juncture is obviously interpret in terms of the actual gap level. Now, given the fact that we've gapped higher by 300 odd points, it certainly is quite ridiculous. Okay, and therefore, based on that, we are looking for a potential reversal. Now, if I just bring up my RSI and give you that perspective too, okay, so bear with me. You can see the RSI is certainly into overbought territory. If you add on the pivot points and price as well, which is quite crucial, is something that I generally tend to observe. It's probably the only two indicators that I use along with the 200 MA. So you can see that we've obviously exceeded the ATR, which is the R3 level, R2 and R1. And we certainly are even above that. So certainly, by all measures, the German DAX rally, it's certainly overdone, or well overdone, and is due a correction. That's my interpretation thus far. Okay, now in terms of the cross-verifying the actual strength in the German DAX, if I just bring up a daily chart of the MDAX, you can see that we are into that fib 61% retracement resistance, and therefore you are looking for weakness on the German DAX. Looking at the tech all-share and 10 minute, you certainly are exhausted, no higher highs, and again you are into that fib 61% retracement, and then again you got horizontal resistance as well. So these are areas or zones that you are going to see resistance on the actual market itself. So looking for further weakness. Okay. Now in terms of the French CAC, let's verify it or cross-verify it with the French CAC. You can see that we are certainly finding weakness in the French CAC. No higher highs in the 10 minute chart, and looking for potential gap fill below. The daily chart on the French CAC, again, you have got resistance. You're putting in a doji resistance, that previous support equals resistance, and therefore looking for a weaker price action. The daily chart. Looking at the Euro stocks, again, the daily chart, previous support equals resistance, and into that 50% retracement resistance. So exactly not a good sign in terms for bulls. Now, you are consolidating at this key resistance zone, or previous support equals resistance, and you do have an argument for a bull flag. But again, given the fact that you had weaker German IFO data, Euro is obviously potentially into support. These are not good signs at all. Okay, 10 minute chart, again exhausted and looking for potential further downside movement. Okay, that certainly is something that you need to take into consideration here. Okay, now in terms of the actual S&P 350, again you are into horizontal resistance, previous support equals resistance. That's something that you need to take into consideration also. And cross-verifying that with the stock 600, again previous support equals resistance, and you are looking at your fib retracement tool as well, and you are into that fib 50%. So again, further weakness expected there. Okay, so I think that's a market wrap. The summation here really is the fact that the euro is into support, bond is into resistance, and European equities are into resistance accordingly. Be sure to visit cfds.com for your trading needs, and goodbye now.